guys, my name is Palash Patil and I'm currently studying in NITK. I'm in my final year, so I guess I'll pass out soon. And I'm going to talk about stock market. What is a stock market? A stock market is a platform where individuals and corporations can buy or sell shares of publicly held companies. Now, uh, how can you think about this? Well, as you guys know, the internet is like a platform where individuals can publish and view websites. Similarly, a stock market is where you can buy and sell or even issue shares of companies. And yeah, so why do companies list themselves on the stock market? Well, uh, the main reason is to raise capital for growing their business. And once they do raise money, they can expand their business. And an easy way to imagine this is like if you imagine the ownership of a company like a pie. Uh, what is going on is the company is giving you a slice of the pie for a certain amount of money, and they aim to grow that pie. So once that pie grows, even your small slice of that pie will grow in value, of course, and then you can sell it later on for more money. So it's important to note that the stock market is not an actual indicator of the condition of any company. It is completely based on what people perceive about the company and how the company is going to do. So it's all about perception. It's not the exact indicator of the health of a company. A company could not be doing anything, hypothetically, and be valued at $1 trillion, or could be actually worth $1 trillion, but now be valued at zero or something, hypothetically. Because people like you and me can be wrong sometimes, and that's when a bunch of people are wrong, you get financial crises, etc. These are the two main kind of people on the market. An investor is an individual who invests in a company because they believe in the business model and they look at long-term growth over short-term profit of uh, of the company or whatever. So what is a speculator? A speculator is like a day trader who makes several trades from a day-to-day basis, making small profits in all of them. And yeah, he doesn't really care about what the company is doing, and doesn't really care about the business model, the values of the company or whatever. So yeah, now this is a recent article about what is going on in our stock market. So since like the recent corona crisis happened, every stock is tanked, and obviously even Vodafone went down, and many companies started buying up undervalued stocks. And recently, when the markets opened up, Vodafone saw this huge rally and grew a lot. But suddenly, this article came saying that Vodafone doesn't have enough money to pay its employees, and people lose their trust in the company, and the stock just tanks 11%. So yeah, this happens like almost on a day-to-day basis in the stock market, because it's like a good indicator about the future of a company, because it's all about people's what they think, how the company is going to do, and how much they trust in that company. So yeah, how did I start? Well, growing up as a kid, my father was always investing in the stock market, and waking up, I'd see like he'd just switch on the TV and watch the news about how each stock is doing. And even though I didn't understand anything at the time, it just subconsciously got ingrained in me. And then later on, I grew up and watched movies like Wolf of Wall Street or The Big Short. I'm sure most of you would have seen it, and that just pushed me more in that direction. And now here I am. So yeah. Okay, now let's talk about some technicalities in the stock market. There's many parameters that you can see, and I cannot stress on this enough. There's so many parameters that you should look at when judging a stock, but these are just two of them because I consider them important. So one of them is EPS, or earnings per share. It is calculated by subtracting all the liabilities from the earnings of a company and dividing it by the total number of shares of that company. So why is this important? Because it gives you a good, you know, uh, like not the best indicator, but a good indicator about the profitability of that company. So if you know the EPS, if it's high, then you know the company is profitable and you know it's going to make money in the future also. So you can invest in that company. Another parameter is debt to equity ratio, where this is a simple ratio which takes the total debt undertaken by that company and uh, to the value of its equity. So why is this parameter important? Because it gives you a good, image of the financial health of that company. You don't want a company which has undertaken a lot of debt. If it has a lot of debt, that means it has many liabilities that it will have to pay off, and in general, debt is bad. You should just avoid debt as much as you can. Then moving on, what is my experience so far? So I have been the SIG head of the business SIG in ACM at NITK, and as a SIG head, I oversaw a lot of projects related to not just the stock market, to business, to economics, many fields, but particularly in the stock market, there was a project which basically used algorithms and data from and gave you a good portfolio allocation model which can tell an investor how much money should they invest in every stock for maximizing their returns in the future. So even you can make models for yourself. It's really easy. Just look it up on the internet. And if you know a little bit of coding, it's super simple. Anybody can do it. So these are some references just to get you started. There's plenty of books and websites and YouTube videos and so many things that you can look up. But these three are things that I found important. The first one is The Intelligent Investor. It's a book by Benjamin Graham. And this is the book that Warren Buffett used to become Warren Buffett. So there's Investopedia. It's like a site where if you have any doubt related to any term in the financial world that you cannot understand, just go to Investopedia. They pretty much explain everything that is out there. And then there's Money Control. It's an app which gives you like the latest news, the stock prices, and about the Indian markets, particularly. It's catered to India. So yeah, that's also a good tool that you should have. If you are interested, please do invest, because the earlier you get into this, the more your returns are going to be in the future.
Thanks for watching. Subscribe and click on the bell button as to not miss out any content. Contact us here.